Just waiting for my little confirmation over here on YouTube, letting me know that we are live. And yes, we are. We got folks trickling in here, even giving us likes already, which is pretty awesome. Welcome, welcome. Hey, as you come on in, chime in, let me know. Let me know who's here. Let me know who's coming on. Really excited about tonight's topic. I know that everybody's interested in what's going on out there. Again, quick reminder for folks. Hey, Ahmed, how you doing? Hello, Linda. Welcome, welcome. Glad to see our hashtag team tackle here. We got Patricia. We got more and more folks trickling in here. Hey, Mike, how you doing? Glad to have you. So welcome, welcome. We're going to be talking about stock splits. I think everybody's excited about stock splits right now. I mean, market's kind of doing what it's doing. Bulls are certainly on parade, and I think some of people's favorite stocks are obviously, we all have heard the news and been watching and waiting for those splits. And a lot of people are wondering what to do about it, which is pretty awesome. Hey, Dennis, how you doing? Hey, Gino, welcome, welcome. Again, give us a like, give us a share, get the word out there. Cause I bet you there's a lot of people out there in your circles who are probably curious about what a stock split is. They might've heard about Apple's stock split. They might've heard about Tesla's stock split. Yep, those are the big ones I think everybody's excited about. I know I am. And I think it's really important just to make sure that people are educated on the topic. And that's why we have this disclaimer here. We always want to make sure we are, conducting ourselves properly, that we're setting the right expectations, that, we're here for educational purposes only. We're not giving you a specific investment or trading advice. And it's really, up to you to get yourself educated. We are educators, and that's what we do, is we help people learn about the market so that they can make their own decisions. Kind of whole give a man a fish, he's got food for a day. Give a person a fish, teach a person to fish, they have food for life. So without further ado, I'm going to go ahead and stop sharing my screen here just for a moment. And I believe I'm going to turn my camera on here just so I can say hello, and get my face out there for folks. And just let y'all know how excited I am to be here. Hey, Adib, glad to have you. And again, as you're coming in, chime in, let me know you're here. I know we've got a lot of our tackle faithful here, and I'm hoping that as, we continue the broadcast here, more and more people will pop on and we get a lot of new blood. So there we go. I'm going to go ahead and bring down my disclaimer. I'm going to share my screen again. I've actually done the unthinkable. I prepared a PowerPoint for us, and we'll go set this up here. Let me go set that up. We'll set that up here from the normal view. Let's see here. Boom, 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 boom. We're going to go ahead and do our little presentation here, slideshow. I'm going to do it from I'm going to set up the slideshow real quick here so I can do it on just one screen. And I will do browser window. Okay. Let's talk stock splits, guys. And here we go. Rock and roll. I've got a pretty title slide and everything for you guys. That's how excited I am about this, getting to talk about the stock splits. So is that coming up on your radar yet? Is that showing up? Nope, not yet. Let's bring it up. There she goes. Glad to have you here, Try. Welcome, welcome. Hey, Mika, how you doing? And boom, there we go. So I'm just trying to figure out how good my lag is on the YouTube so I can kind of get an idea of where we're at. Okay, so as we go talking stocks, but you guys see my screen yet? You guys see the stock split screen coming in? Yes, no, maybe so. Yep, we got it. Okay. All right. Well, I thought we'd start out with some real basic stuff like definitions. First of all, it's probably helpful for, I know a lot of you, this would be completely redundant, but what's a stock? Obviously it's a share of ownership in a company, right? And so what does it mean when a company splits? Well, I think one of the first things you want to understand is, well, let's talk about what a stock is. when a company goes public, and I bet you guys can think of some companies that have gone public recently. You could probably name a few if I threw it out to you guys to name a few companies that have um, gone public in the last year or so, 2 years. You can probably throw out names like Uber and Lyft and those types of things, and Beyond Meat, yada yada yada. Well, when a company goes public, they do an initial public offering, and that initial public offering will have a total number of shares issued. And so they have a predefined number of shares, and there'll be shares that'll be held by the insiders, and then they'll have shares that'll be held by the public. And so DraftKings, great example, Linda. RKT, great example. Try. So when a company goes public, they define the valuation by what they estimate the company value is, and they issue an X number of shares, and that's how really they determine the market cap, right? What's the market capitalization? And the reason a company issues shares, obviously, is to raise capital, for really no cost to the company. They don't have to pay interest or anything like that. They just offer shares to the public, and the public buys them, and that gives the company additional capital with which to work and build the business. Now, if you want to buy shares of one of those companies, you wanted to buy shares of a DraftKings or a Chewy, for example, just because you want to buy some doesn't mean that they issue more shares. You need to buy them from the general number of shares available to the public, which is what they refer to as the float. Okay. The float is the total number of shares issued to the public. Now, market capitalization is determined by the valuation of the shares, and it's divided by total number of shares outstanding. And that includes the shares held by insiders. Does that make sense? So if you're the CEO of the corporation and you retained 51% of the total shares outstanding, and then you issue the other 49% out to the public, or whatever, however they break it down, obviously that math is going to be different from stock to stock. That's really what defines that total number of shares. And then the question is, well, how much are those shares worth? And a stock split's a really cool concept, I think, because I think the ultimate goal is it's as the stock gets more and more expensive, a split will increase the number of shares. It'll double it or triple it, whatever they do for the split, whatever ratio they use, and it'll bring the cost down by that same multiple. So let's talk about and just kind of define what the split is, and just kind of make it easy for everybody. And again, this might be super rudimentary for you, but for the newbies out there, I bet you really appreciate the basics. Again, a stock split is when a company divides the existing shares of a stock into a multiple of new shares to lower the price and boost the liquidity. Now, I imagine a lot of you are really chomping at the bit for the companies that have been named, like Apple and Tesla. Okay, how much is Apple stock trading for right about now? A little over $500, right? A little over $500. Okay. And a lot of folks, when they look at the price tag of a stock like Apple, then they think to themselves, oh man, $500 a share, that's pretty pricey. I want you to just think about this. If you know that Apple's having a 4-for-1 split, and they take the 500 some odd dollars a share, and that's the multiple of 4 to 1, they divide that by 4, they're going to end up being around what, $125 a share or so. Okay. And I like to use the round math, hero, because that makes it easier for me. So $500 even, just ballpark. And it'll be whatever that number is divided by 4. And so if you own the shares, I know a lot of you were talking about buying the shares in advance. You could have it and get the split. And I know some of you are waiting to buy it after the fact, but that's basically the idea, is all of a sudden there's going to be 4 times as many shares of Apple. And so you have a much more liquid stock. Market cap, however, will basically stay the same. And so that's the general idea, is the total number of shares outstanding will increase by the multiple. So they could do a 2-for-1 split. They could do a 5-for-1 split, like you're going to see on Tesla. They could do a 7-for-1 split, like they did on Apple back in 2014. I mean, it could be really any number. They can even do a reverse split. Have you guys ever seen a reverse split on a stock where they take it the other direction, where the stock price is getting too cheap, and for optics or for whatever reason, they decide to reverse split the stock? So they can take it the other direction as well. And at the end of the day, it really doesn't change the valuation of the company because they, change the number of shares by the multiple and then divide it by the multiple. And so that's the new price. It's the exact same math. And as if Apple wasn't liquid enough already, but there's so many cool aspects to the stock split. And I think, again, the better you understand it, the more confident you're going to be in participating in that type of thing. So here's the simple example. If you owned 100 shares of a $100 stock, the net liquidation value of that position would be $10,000, right? 100 shares times, times $100 a share. Okay. If there was a 2-for-1 stock split, the investor would now have 200 shares of the same stock. They'd be valued at $50 per share. 2-for-1, they divide the price by 2 and issue twice as many shares. And the net liquidation value is still going to be $10,000. Does that make sense? Pretty simple math, right? Okay. So I think we all get that. And that's the easy part of understanding what a split is. I think the bigger question is kind of some of the things that we're going to cover here in a moment. Now, for whatever reason, my little clicker's not working. I keep thinking it's going to work and I keep clicking on the button and I might have a dead battery. Or better yet, I have no batteries in my clicker. I think I stole them to put in something else. All right. Okay. I'm sure I've got a video game controller somewhere that takes AA batteries. AAA. All right. There we go. So how a stock split works again in general is it's going to come down to, it's a corporate action. It's really determined by the board. As the board gets together, they can vote on whether or not they want to do a stock split. The topic could come up, and it's just that simple. And again, the idea is relatively simple. I think, again, one of the big things that a stock split tries to accomplish is I think it's the intention is to bring the cost down, to bring the price tag down, simply so that it becomes accessible to more people. Apple's a perfect example. How many people out there love the idea of owning Apple? I mean, like everybody, right? Who wouldn't want to own that stock? And I'm not suggesting or advertising that you should buy Apple or not. That's not our job here. What I'm saying is when you look at the price tag at $500 some odd a share, how many people do you think get a little sticker shock? Just like when they walk into the Apple store and they look at the price of the laptops and the desktops and the watches, they get a little sticker price because Apple obviously is a premium product at a premium price. Now, fast forward to what they were doing the split 31st, I believe. Fast forward to the 31st, you can now own Apple at $125 per share. Psychologically, something happens there, doesn't it? I know it does for me. Like I'm pulling more money out of the market because I just want to own more shares. And I just love the idea of buying Apple at 125 because I've seen this before. Yeah. And then the options get in there too. And that's another topic we're going to have to cover. What happens to the options on a stock split? So in a moment, we're going to talk about what happens with those options on a stock when the company splits. But it's just that simple. 100 shares of a $10 stock as opposed to 10 shares of a $100 stock. How many shares could you buy? I know, Linda, I think you mentioned something earlier in the halftime report, and correct me if I'm wrong. I think you worked your way up to 25 shares in Apple so that you could have 100 shares on the split. Is that right? So if you own 25 shares and you got the 4-for-1 split, you'd now be the proud owner of 100 shares. And voila, just like that, you can write covered calls and buy protective puts. And it becomes a bit of a game changer for people, I think, on how they can trade and the methods they can trade. And I think one of the beautiful things as well, Ahmed, is if you love the options on Apple right now because they're cheaper than the stock, imagine how much more you're going to love them, a week and a half from now or whenever, when the stock's trading down 125, 130 bucks, whatever it's at. And the option prices also drop by, a multiple of 4. So that's pretty exciting, I think, in that regard. And so, that's really what we're talking about, is just what goes on with the stock split. And, how a stock split works is it's really, again, just kind of up to the company to want to do it. And they, fill out their paperwork, they go through the stock split, they make their announcement, and anybody can participate. And a lot of people are asking, well, maybe, should I buy before or should I buy after? And I don't think there's really a correct answer. When a stock is split, again, it's automatically adjusted. So you don't have to do anything. If you have questions about it, you can always contact your broker, but it's an automatic occurrence. So you don't, Linda, you don't have to do anything to have your 25 shares to automatically turn into 100 shares. It's just simply one day you wake up and voila, you had 25 shares at the higher price. Now you have 100 shares at lower price. Just that simple. And again, a company can do whatever ratio they want. They can do 3-for-1 split. They can do a 5-for-1 split. I've seen 10-for-1 splits. I've seen 7-for-1 splits. I've seen 4-to-1 splits. What's Tesla? 5-to-1? I believe Tesla's doing 5-to-1. The dividend, well, the number of shares would increase, but what happens, Kathy, is the dividend also gets diluted, does it not? So it ends up being the same because it's paid out per share. They quadruple the number of shares. You now have quadruple the number of shares. They pay out the same dividend. The math ends up about the same, basically. And, if you have 100 shares, I love this question, Dakasha, or Daksha, I didn't mispronounce your name. Yeah, if you have 100 shares and own a protective put, well, all of a sudden you're going to have 400 shares and 4 protective puts. And we'll talk about how the options are affected again in a moment and just make sure everybody's clear on that. But again, I just think this is a really exciting topic because, the market's obviously bullish and maybe irrationally so. And, I've seen stock splits and I've studied stock splits for years and years and years. And I think that there's a general behavioral pattern that I think we'll also get to talk about. So again, if it was a 2-for-1 split, twice as many shares, half the price. If it's a 3-for-1 split, 3 times as many shares, 1/3 the price. 4-for-1 split, 4 times as many shares, 1/4 the price. You guys get the concept, right? It's not rocket science. And I think that's another thing that makes it easy and accessible for people, particularly if you're new. Now, just out of curiosity, and it'll take a minute for me to get your responses because there is a small lag between what I'm saying and what I'm seeing coming back on YouTube. So be patient with me there. How many of you are relatively new to trading in the last year? If you've been trading for less than a year, maybe you're one of those new Robinhood traders, decided to get yourself a little educated, started following tackle trading, just coming to hang out, getting to know us, just learning the ropes. If you have been trading for less than a year, I want you to type in the chat, less than a year. And I knew you were an engineer, Ahmed. I was totally making stereotypical judgments in my mind. I was guessing that you were an engineer because of the questions you ask, because only engineers ask those kinds of questions. So that's funny to me. That's how big the lag is, by the way. Okay. If you've been trading for more than a year, I want you to type in more than a year in the chat. So less than a year, trading experience, more than a year of trading experience. Okay. So less than a year, less than a year. We got a crypto junkie in the house, Chris. Okay, less than a year. Okay. How many of you have ever, if you have experienced a stock split before, you've actually traded one or watched one or studied one, I want you to type in been there before. And if this is going to be your first go round with a stock split, watching some of your new favorite stocks, I want you to say first timer in the chat. Okay, it looks like we've got a lot of people here with more than a year experience and quite a few people with less than a year experience. And that's good. And again, have you ever traded or invested in a split before? You again, been there, done that, or first timer? I'd like to see kind of what you got there. Hey, Whitney, good to see you here. Been there before. Okay. Now, Hero, you've been there before, and Kathy, you've been there before, and Can Jeff, Canis after Christmas. I don't know what you're talking about there, Jeff, but you've been there before. I bet you have some expectations based off of your experience. And I'll be curious to know if the pattern you've seen in stock splits is the same one I've noticed over the years. And I've been trading for about 20 years now. And, I've had, good goes of it, rough goes of it, and up, down. I've experienced about every kind of market emotion and success and failure there is as a trader. And it's one of those things that even though I've seen many stock splits, and I've played many stock splits in the past, what's past can be prologue. So those patterns that we see in the past can be a prologue to what's coming down the pipeline, but does it guarantee the outcome? Could there be some sort of, change in sentiment or variable or something that we can't account for that could alter our expectation or alter the outcome from what we expect? So that's something we all need to be considering and understanding the risk on. And, if you're, here because you're excited about the potential stock splits, awesome. Just got to remember that, there's always risk involved. I think that the psychology behind a stock split is super interesting. Super interesting. And I really don't have any slides or any bullet points or anything prepared on the psychology topic. I just wanted to have an open conversation about it. What do you think is going to happen with Apple? If you're guessing and general human nature, what do you think quadrupling the number of shares and cutting the price in a quarter, into quarters, bringing the price down by a multiple of 4, what is that going to do to people's psychological state, emotions, desire, what they perceive as value, et cetera? And again, I'm just kind of curious to know. It'll take a minute for you guys to catch up with me, so I'll be patient with that while it comes in. What do you think people are going to think? There's going to be a surge in demand. Why is there going to be a surge in demand? Why do you think that? I mean, there's no guarantee. Apple's cheap. It's time to buy. It's, to me, what it kind of tells me is basically, attention Kmart shoppers, we have a blue light special on your favorite stock. Buy one, get 4, or whatever. Buy one, get 3 free. People will, I think, that otherwise would find it cost prohibitive, are going to be excited to buy. Now, in a great sense of irony, does it actually change one lick of the valuation? Does it actually change 1 ounce of value to Apple stock? In reality, does the valuation does the market cap change? Does their, revenue change? Do any of those things change? No, none of it changes. It's just that the price becomes more attractive. The value is the same. So at the end of the day, is there really any difference in buying 25 shares at the current price? No. No, the market cap doesn't change because they increase the float. They increase the shares outstanding. So it'll end up being about the same. Perceived value changes dramatically, though. Perceived value changes dramatically. Have you ever bought something just because it was on sale? I know I have. How many of you been suckered into those buy 2 for $5 things that they do at the grocery store? Or buy 4 for, for 5 for $10, whatever it is, that little gimmick they use in grocery stores to get you to buy more. You ever fallen for that one? Well, I don't need 2 giant jars of jalapenos, but I got 2 giant jars of jalapenos because it was, buy 2 for $5 and, or, $2.50 a bottle. And I could have just bought the one bottle for $2.50 because the grocery store, they have to honor that, right? They can't just force you to buy two. We've all done it. It's for sure true. So I think this is the most interesting part of the conversation. I mean, I think the mechanics are important. And I think that understanding the what, where, why, and how the split works is super important. But for me, it's what's going on in your head. So side question, what happens if you have one share, you come out with 1/4 of a share? No, if you have one share, in this case, Travis, you'll end up with 4 shares at 1/4 of the value. Same value, same money. But if you had one share, you'd end up with 4 at 1/4 of the price. Same amount of money. Same amount of money. Yep. Oh yeah, they put the candy bars right there on sale next to the cashier. And yeah, what kills me is what they put down at like kids' eye level at the checkout stand. Like I cannot get out of the checkout stand without my son wanting to buy something because it's right there at his eye level, and they know it's going to get him. The next thing you know, I'm sharing his snack. Yeah, we all do it, right? So I think that's really the most interesting part of it. Now, I've seen, again, quite a few stock splits over the years. And sometimes the initial increase in demand drives price up immediately. Other times, it can flood the market with inventory. All of a sudden, there's 4 times as many shares, 5 times as many shares, 7 times as many shares. And so a lot of people will offload shares because they have so many now. They might want to move capital elsewhere. And whether or not that's rational, that's another question as well. But that quadrupling or doubling or whatever number it is on the split, increase in the number of shares available can actually suppress prices in the short term. But psychologically speaking, what do people remember the price of Apple being? In this case, a week from now, it's going to be 125, 130 bucks, something like that. But what do they remember it being? Everybody remembers it being a 500 some odd dollar stock. So that memory really affects perceived value. And I think it gives the stock price liberty to run. And I'm going to tell you guys a sad story and a good story. Many years ago, a guy I know really, really well, owned a bunch of shares of Apple at $9 a share, $9 a share, back when they were selling candy colored computers. And that stock price started to perform. Their CEO came back into town wearing his turtleneck and his fancy PowerPoints. And the stock price surged from being in big trouble. Another guy named Bill Gates came in and gave him a bunch of money to help him out. And their stock price went from being really, really low in value, and it ran up to about $95, $97 a share, somewhere in that ballpark. And they did I believe it was a 3-for-1 stock split. I might be wrong on the number, but I think it was a 3-for-1. And next thing the stock price is 1/3 the price and 3 times as many shares. And it was trading around 35 some odd dollars a share. And within a couple of weeks, it had run up to $45 a share. And this guy I know really, really well decided to sell at a profit, thinking he's a genius. Man, just made 10 points in like 2 weeks, 3 weeks, or whatever it was. Yeah, lock in some gains, right? But guess what the stock then proceeded to do? People remembered it being a 90 some odd dollar stock. Cashed out at 45, only to watch it run right back up to 90 within about 3 or 4 months. I was a little dumbfounded and kicking myself type of thing. And so I learned a little something about how stock splits, I think, psychologically work. Now, whether or not they actually play out that way and whether or not it plays out that way this time, I don't know. I have my suspicions, but I think that a stock like Apple, a stock like Tesla, that's really popular, I mean, really, really, really popular, all of a sudden, attention Kmart shoppers, we have Apple on sale. You know, we have Tesla on sale. It's painful to talk about. It is painful to talk about because the woulda, shoulda, couldas. I believe you're going to see a surge in demand. You'll have an increase in supply, but I believe you're just going to see a surge in demand for no other reason than the fact that it is perceived as cheaper. It is perceived as cheaper. And so, you know, Linda buying ahead of time, you know, buying 25 shares and winding up with 100, is it really going to be much different for you than if you had waited until they were a quarter of the price and then bought 100 shares instead? I mean, the actual transaction itself, the actual money spent, you know, assuming the stock price doesn't change dramatically, will it really make that big of a difference? Maybe, maybe not. If you buy ahead of time and you see an initial surge on the first day, buying ahead of time you'll benefit. But if you wait and then you buy the day of, you probably get a pretty reasonable price and you'll still probably be able to benefit from a potential surge. And if Apple goes down, people will probably buy more. So I don't know. Again, I don't know which way it's going to go, but I just think psychologically speaking, it's super, super interesting to kind of frame it in that context because it really isn't that complex at the end of the day. The big change in valuation is really not that big of a deal. But boy, does it cause people to take action. Well, and that's another big question, you know, is this market rational? If you think this market's rational, type in rational. If you think this market is irrational exuberance, type in irrational. I'm curious to see what you guys think. And again, I'll be patient, just kind of waiting to see what it takes a minute for the YouTube to catch up. Tech did rock today, didn't it? It really did. Bought the wrong stocks. Here I am like a sucker over in energy stocks. Or whatever wrong stocks you're buying. It's not just whack, Jeff. It's wiggity whack. I think it's very irrational. And I think the greater the irrational movement, the more violent the correction can be at the end of the day. But even though it's irrational, how many people are just going to say, you know what? Tesla's getting split. Tesla's valuation, I think, is what I would refer to as stupid high. I mean, I know, Hero, you and I have had this conversation, and you've done a lot of the research, and I do believe Tesla is an amazing company with a lot of future ahead of them. But their current valuation compared to their revenue is nuts. And so if you're paying the price of Tesla right now, you're entirely basing that off of future revenue. And now you can get 5 times as much. It's amazing, right? You can really increase your leverage. And it's, you know what? I think it's okay to be irrational just as long as you have a game plan for the risk. As long as you got a game plan for the risk. Yeah. And I'm not saying Tesla's a bad buy or not. I just think from, a value investing standpoint, I can't see Benjamin Graham saying to himself, yeah, that Tesla is a great value. No, that you're not going to get your Benjamin Graham and Warren Buffett style investors to ever admit that Tesla is a good value. It's not. It's way overvalued. Doesn't mean it can't go higher, though. Doesn't mean that in the future they're not going to be worth more. It just means that you're paying a premium to own it now in a belief that they are going to start cranking out more revenue in the future. Yeah, well, it's just as long as you know you're being irrational, I think that's the key. So I think that's kind of one of the big psychological questions out there for folks. And I find that stuff fascinating. Now, I'm going to take you back in time to another Apple example, since Apple's obviously on our radar. Back in 2014, Apple did a 7-for-1 split. A 7-for-1 split. And their price was trading around 645 some odd dollars a share. It had been as high as 700. And after they split, the $645.57 divided by 7 put it out at a value of $92.70. So if you had 100 shares, you now had 700 shares. If you had 1,000 shares, you now had 7,000 shares. Apple's outstanding shares increased from 861 million to 6 billion shares. The market cap remained unchanged at 556 billion back in 2014. What's Apple's market cap today? Anybody know? Isn't Apple one of the first $1 trillion companies ever? It's pretty impressive. The day after the stock split, the price had increased from 92.70 to a high of 95.05. The first day it surged. And if memory serves, it ran up to about 118 in the first couple weeks. I know a guy who bought it and then sold it at 118, thinking he was a genius. That price stuck in my head. If I had a time machine, I'd just go back and tell myself not to sell. Because they did a 3-for-1 split, a 7-for-1 split, and I'll do it. Yeah. There's the market caps. I'm not sure if Alphabet's 2 trillion or not, but I think that Apple and Amazon were some of the first companies to hit $1 trillion market caps. And I honestly don't know. I haven't looked at Alphabet's market cap recently, but I know it's high. It's nuts. Well, wouldn't it be lovely if Amazon did split, Jasmine? I'm with you there. I think that'll be interesting. So again, I think these are really fun conversations to have. And I don't know if Apple price is going to surge on the first day or the second day, or if it's going to run for a week or a month or a year. I don't know, and you don't know. But do you understand the mechanics now? Do you have a better understanding of how the mechanics work? For those of you who it's for your first time, you're probably getting a clearer picture, higher resolution picture. If for those of you who it's not your first rodeo, you probably already understand how it works. Just kind of comes down to a question of how much you're willing to risk to find out. So I think, again, really, really fascinating questions. Now, the options strike prices and values will reflect the stock split and are subjected to the same multiple of the stock split. I think this is a part that some of you, even if you've seen a stock split before, you might not have seen what happens to the options before. And if you have any doubts or any concerns, what you want to do is you want to call your broker and have a conversation about it. Like if you happen to have, like I had the question about the protective put earlier, I can't remember who asked that, but that was a really great question. I own some shares. I have a protective put. What's going to happen to my protective put? Am I going to be underinsured, or will we actually, the option will be subjected to the same multiple. So it'll be, you'll end up with, if you had 100 shares of Apple in a protective put, you'd wind up with 400 shares of Apple and 4 protective puts. The stock price would be cut down into a quarter of the price, and the option value would be cut down into a quarter of the price, and the strike price would be cut down into a quarter. So if you had a $100 stock with a $100 strike price, for example, and there was a 2-for-1 stock split. Again, if there was a 2-for-1 stock split, you would now have 200 shares of a $50 stock, and your $100 strike price would now be a $50 strike price, and the value of the option would be 1/2 as much. Does that make sense? I'm going to repeat that. If you know, the example I'm giving here is if you have one contract on a $100 stock with a $100 strike price, right at the money, and they did a 2-for-1 stock split, you would now have, 2 contracts at the $50 strike price, and they would be worth half as much, but your value would be the same. Yep. The value and the ratio would be the same. That's kind of the point. So, and again, if you have any questions or doubts, where I find it curious is when you have like random odd numbers, like 2-for-1, 3-for-1. If you got like a 7-for-1 or a 5-for-1, the math can be a little harder than like a simple 2-for-1. But at the end of the day, it works out. And it's pretty cool concept. I think the way it all plays out. And I'm really excited to have this ongoing conversation over the next couple of weeks. Doesn't Tesla also split on the 31st as well? Isn't that the same date? If what I've seen is correct, or what at least my memory at the moment is telling me, I believe they are doing their split on the same day. It's like a split party. It's like the NASDAQ's throwing a stock split party for their most popular. Yeah, 5-for-1 on Tesla, and I believe it's on the 31st as well. So that's going to be fun and exciting to be talking about, and just to see how it plays out. And I've studied lots and lots of stock splits over the years, and I would say on average, the prices do go up after the split. On average. Well, okay, so Chris, what type of cost does the company incur for the split to their stock? That's a great question. Theta will be multiplied by 4. If you got 4 contracts, the theta will be cut in 4th, but then it'll be basically multiplied by 4. So it'll come out the same-ish. I want you to think about Apple's market cap right now. As the stock value increases, what happens to their market capitalization? As the stock value increases, what happens to their market capitalization? As the stock price increases, the market capitalization increases as well. So, and I don't think the file, I honestly don't know. I've never done it myself. I don't know if there's any costs of actually filing the paperwork and doing the split. Like, I don't know what kind of fees other than paying their lawyers to draw it all up, to fill out their forms, et cetera, et cetera. But at the end of the day, what do you suspect will happen to the stock price after the split on Apple and on Tesla? Same story. What's going to happen to the stock price? It'll go up, potentially. Guaranteed, not a guarantee, void where prohibited, not valid in all states. And if more people can afford to buy it, even though they could go buy 25 shares today and get the same value, same basic bang for the buck, they couldn't trade covered calls on it. They couldn't buy protective puts on their 25 shares. But if all of a sudden Apple, attention Kmart shoppers, we have Apple stock on sale for $125 a share, how many more people are going to start throwing money into Apple that wouldn't otherwise have bought it because they thought it was too expensive? Probably goes up, right? And if the cellular memory of the stock price being at 500, because people will remember it being a $500 stock, they will remember it being a $400 stock, they'll remember it being expensive. It will probably increase their market capitalization, most likely. So isn't it to the benefit of a company like Apple or Google or Alphabet or whoever to split? It increases the liquidity, increases accessibility, increases oftentimes demand, makes it more attractive, draws in new money, increases their overall market capitalization. Guaranteed, not a guarantee. People remember it being $500, so there's a good chance it'll keep running back up there. And that's probably contingent on whether or not the market corrects and tech corrects and, reality of the economy. And that's hard to say. Some of the tech companies are actually tearing it up. Their revenue's killing it. The revenue is killing it. They're definitely in a different segment of the economy than Main Street. So interesting questions to ask and answer. And again, this is just a screenshot of Apple today. And you can see in Thinkorswim, they got a little, 4-for-1 stock split coming out as of today. It closed at 506. I don't know exactly where it will be when the stock price splits, but just for, argument's sake, to make the math easy, say it's $500. If it's a 510 or 525, it'll divide it by 4. So there's a great question. They're splitting in August, but September can be a bearish month. It's not always a bearish month. It might be a bearish month. I mean, we got an election coming that's probably going to be one of the weirder elections we've seen in a long time. There's certainly a lot of uncertainty out there and some instability and whatnot. And so the market's, racing back to all-time highs, even though we still have really high unemployment and consumer confidence is way down. I've heard tales, and this is anecdotal evidence, that, hey, people have been taking their government stimulus money and going and buying new Apple products. I bought a fridge with mine. Would have been much cooler if it was another iWatch. But people have, some people have been spending their money there. It's just, I think one of the coolest things, is it just it'll make Apple, I think, a lot more accessible to a lot of traders in our community. And same with Tesla. It'll make it a lot more accessible for both stock and options. The valuations won't change, but the perceptions sure do. And so, 4-for-1 stock split on Apple, and we got that, 5-for-1 stock split coming up on Tesla. I think they're going to be awesome to watch, and I'm really looking forward to talking about them in the Traders Lounge and in the halftime report, and as we do our scouting reports and whatnot. I still haven't gotten the assessment back, Linda. I'm going to probably have to pay for the damages on the jet ski I just rented. I got the videos back from the outfit. Show they like recorded the water in the engine and showed me videos of them flushing it out. I have no idea what they're going to charge me in parts and service and labor. And, I'm hoping I don't get stuck with a big bill. I might end up being the proud owner of a used jet ski. I don't know. But yeah, thanks for bringing that up, Linda. That's kind of funny. I'll tell you what, though. It's important to have a game plan. Because if you're interested in taking advantage of these stock splits, and if you're interested in Apple or in other companies that are reporting real soon, and we got a whole bunch of stocks coming out. Like, I did a random Google search and I found an upcoming stock calendar here of who's reporting earnings here in the near future. Let's see here. Boom. Let me get that to stop playing there. If it'll. I'm going to quit PowerPoint real quick. I don't need that anymore. Okay, check this out. So I just did a quick search and I found this random website, MarketBeat. I have no affiliation with them, don't know the first thing about them. They just got a list of who's reporting splits coming up. And they've got them coming out on the 28th, 27th, and 28th is Apple, Tesla. 28th, but the day they actually split is the 31st. That's the actual day that happens. And they announced on different dates, but kind of coming out. And you can look at any of these other companies. I'm sure more people are interested in the Apples and the Teslas than they are, say, the Treks, for example. I don't know too much about Treks, but they're not on my tech radar. So you can kind of keep track of them. And Yahoo Calendar, they keep you can go look it up on Yahoo and find a calendar of upcoming stock splits. And I think in order for the stock split to cause a really true strong surge in demand, it's got to be the kind of company that people really want to own anyway. A random stock split on a company that does not really have a lot of high demand and great valuations, expectations, et cetera, forward-looking outlooks and estimates. You could probably expect similar pattern, but not necessarily the same type of pattern. So I think it's going to be super interesting to watch. So we have a little bit of time left. I was going to keep you for an hour or so. And, I certainly don't mind wrapping it up early, but I thought we could at least do a little bit more Q&A. And, if you're new to Tackle Trading, make sure you hit the like and the subscribe and all that fun stuff. Smash those buttons and keep following us. We're always putting out awesome content like this. And if you're not a pro member yet, it'd be a great time to be a pro member because, boy, the market sure is interesting. And there are great, interesting companies out there and stock splits. And if you're looking for education and, how to build your confidence and skill set as a trader, that's what we do at Tackle Trading. We have awesome content and reports and a great community and all kinds of little educational and training courses and things available to you. So go check out our pro membership. It's really hard to find. www.tackletrading.com. And in the meantime, as you're looking at that, you can go take advantage of our 15-day free trial where you get to come in and we'll give you a little warm welcome and an onboarding and show you how to use it and take advantage of it. And I know our faithful pro members would give you an awesome testimonial about how awesome it is. And let's see some of these questions. I'm not sure. Something broke on the jet ski. I hope the guys who rented me the jet skis never watch this, but my niece and nephew swamped it. And then my sister ran our boat over some rocks that were hidden shallow in the middle of the channel. All of a sudden crept out of nowhere and she took the direct drive and the propeller and I think the repair is going to be like $5,000 to $8,000. So it's one of the more expensive vacations I've ever been on. I think I have to buy some Apple stock, guaranteed, not a guarantee, to help compensate for that. Let's see. Okay. So I assume that you plan on buying Apple the day of the split. Do you need to do a market order? No, you can use a limit order. I mean, you can just go in and buy it at the current price. If you wanted to try to buy right at the open, I'd wait for the opening price and then try to pick it up with a limit order. Watch out for crazy bid ask spreads. And I bet you there's going to be a ton of volume. I bet you I'm expecting a ton of volume. So Linda's already buying in advance is probably not a bad idea because the outcome is unknown, but you're certainly in a posture to take advantage of what the perceived pattern would likely be. Question, how do you set an automatic trigger for a limit order for a bull call or bear call spreads at the best price? That's a different question, but you basically when you're setting the spread, you use a limit order. And it'll automatically, if you're using like Thinkorswim, it'll split the spreads for you and you should just be able to submit the order. It shouldn't be too difficult. You could also implement option strategies around a split on Tesla or whatever. And same kind of thing, speculate with the stock, speculate with the options. If you're wanting to, as an investment opportunity, I think buying the stock would be great. You could buy, speculate with short-term options, long-term options, spreads, credit spreads, debit spreads, butterflies, back ratios. I mean, whatever you believed your bullish bias was, you could kind of match the strategy. Go look at the tackle trading playbook and, pick the right strategy for you. Because it'll be an interesting one to watch. Any other questions? Again, I don't need to hold you here for another 5 minutes just to meet that requirement, but boy, I sure am looking forward to our conversations over the next couple of weeks as we talk about these and get to see it play out. And I like that attitude either way. I'm holding long-term, doing covered calls when the time is right to make money. That's probably a pretty reasonable plan, Linda. And I bet you know how to buy a protective put if you needed to. And I bet you know how to use a protective collar if you had to. And isn't it nice to have a round lot on stock rather than having to buy 7 shares or 23 shares or whatever you can afford, to be able to actually buy round lots, meaning 100-share increments? Makes it easier, gives you lots of options, pun intended. Well, I had a lot of fun. Yep, I had a lot of fun. I hope you guys enjoyed this information. Again, for those of you who are new to our community, just getting to know us, come subscribe, take advantage of the free 15-day trial. There's no obligation. We got a great product at a really great price, really fair price. The regular subscription rate is like $97 a month, and it's tremendous value. And we've got a awesome growing community. I'm watching our YouTube followers increase on a daily and weekly basis. And again, everybody give it a like and a share. And I'm sure you got a lot of people out there in your circles who'd be interested to know more about the stock splits that are coming up. And how do you know if you're a pro member? Well, one, if you signed up, I don't know if you're doing like ambient shopping or something like that, Stacy, buying things you're not sure you're aware of. But yeah, if you sign up, you'll get a confirmation email. And I am just teasing you, by the way. You will get a confirmation email. You'll get to schedule with our onboarding. So you actually get to get a nice little hand holding and a walkthrough by Frank. And we'll kind of show you how the platform works and what kind of features and benefits the website has. And again, we'd love to have you. So if you're not sure yet, you can always email us, team@tackletrading.com, and we can help get you set up. And I bet you if you emailed Mark at team@tackletrading.com and asked him nicely, he might even give you a little special something or other, maybe an extended free trial. Tell him Noah sent you, and I'm pretty sure Mark will hook you up. So been fun. I appreciate everybody coming out and spending some time with us and talking stock splits. I thoroughly enjoyed myself, and I want to again congratulate y'all for coming out and hanging out with us. We had a good group tonight. Again, I see a lot of you that I know, and I'm sure that a lot of you that I don't know yet, but I sure would like to. And hopefully, you like the way we communicate. So we will see you guys on the flip side. And for those of you who are pro members, I'm doing the Step Mastermind group here in 30 minutes. So come on in, and we'll have another great conversation in about 30 minutes. See you guys there.